A very good afternoon, everybody, on a wet Friday afternoon. It's been wet, the last week. The rains are here. The farmers are happy. The dams possibly, will be filled up. But let's hope that it continues raining. But it's also been an exciting week. You guys are growing goatees. I don't know what's happening in the office.
I've always had a goatee.
Could we please zoom in on Ranga?
Guys,
Look at Ranga.
you can't be scandalizing the producer.
Look at that. You're looking handsome and you've got a goatee going there. What's happening?
Half of it is silver.
That's okay.
But I've always had a goatee, but I think that's the only part of his face that hair grows. So he's he's displaying it for the whole world to see.
And you?
No, I've always had a goatee.
No. I mean, it's grown.
I just probably haven't groomed it. But I've always had a goatee.
Alright, okay.
Yeah, it's my go-to.
Well, I quite like the facial hair.
Thanks. It wasn't anything deliberate. It's just by accident. So
Are you sure? How do you grow a goatee by accident? How does that happen?
maybe it's a story for another day. But look, I'm not the type to really make a fuss of how I look anyway. So
Okay. All right. And you? Dry January is over.
Yeah.
We see you're drinking again.
Yeah.
And suddenly.
Oh, this is actually my first drink.
You've got a twinkle in your eye.
Well, this is wise waters always bring that twinkle. That's why alcoholic beverage sells so well all over the world, right? if they didn't add twinkle to people's eyes.
Well, yeah, and clearly from the comments, everybody wanted you to start drinking.
Come back again. Yeah, so I'm easing into the
Apparently,
game.
you're more lucid when you are.
I don't know about that. So I'm easing back into the game. I was drinking a lot of the non-alcoholic version of Heineken during dry January. So they've introduced silver, which is a euphemism for light. The normal Heineken has 5% alcohol by volume. This one is 4%. So it's a lighter beer.
What's the feeling like? When you've gone for 30 days without drinking and then you start. Is it easy? Is it hard? Does it still taste the same? Does it taste better?
No, it's definitely not hard. Of all the things that it is hard is not one of them. It's definitely quite easy. And if I made you blind test the non-alcoholic version of Heineken with the alcoholic version, you probably, as a teetotaler, wouldn't be able to tell them apart.
Okay.
So the taste
But you
doesn't
can.
really... No, I can't either, I don't think.
All right. Okay.
Yeah. So the taste doesn't really move the
I hope
needle.
you enjoy yourself, and I hope that you'll be more lucid this time around. Yeah, let's have a recap once the show is done, and let's see if he was more lucid with alcohol than without.
Yeah. What are you having?
Well, I must say,
It
we've enjoyed the period we've done this show, the last 30 days where you were.
Well, I had fun as well.
Yeah. Great.
Although the viewer seems to think that.
Well, they missed the.
Yeah, they missed the drunk referral, the drunken master.
Well, I'm having an Earl Grey classic. Beautiful packaging.
Yes. The packaging
loose
is much
and
more
it's
interesting
just,
than what you're drinking.
Yeah.
For
So
once
it's actually my first time drinking.
we don't have a condom
black tea.
wrapper. We have a tin.
Oh yeah, no. And I mean, it smells divine. If you wanna.
It looks quite fancy.
Yeah. It actually smells quite interesting.
Yeah.
Yeah.
There you go.
And you are having water over there?
Yeah, quite fancy.
What's happening?
Quite fancy, but kutsaridzika unge mfushwa.
Well, it is mufushwa, right? Because what does mufushwa mean? It's dry leaves.
Yeah.
Right? Is that not the technical definition of mufushwa?
So
Am I wrong?
So going to be drinking mfushwa there.
Well, tea leaves are mufushwa. Am I wrong? Please, in the comment section, please let us know if indeed I'm wrong or I'm right. Okay, gentlemen, what we want to discuss today is something that obviously during this period of time is people are thinking about which A-level subjects they're going to take because they're thinking about their future. And we know that we've got a very vibrant young constituent that actually watches the show. and we always get in our inbox, career planning advice. People asking for career planning advice.
For
What
sure.
should we do? What can we do? That sort of thing. And I thought that today will be a perfect time for us to actually discuss this. And what I wanted to discuss is something that's interesting in view of what's actually happening in our economy. And the way we sort of want to do this is use the stats and use something that we are all very familiar with, because we all at some point eventually ended up doing commercial degrees. And if you think about it, today you have maybe about 10,000 graduates, commerce graduates, graduating from university. And before the show,
In Zimbabwe, that is.
yeah, in Zimbabwe, this is commerce,
Okay.
right? Those who've actually studied commerce. And before the show, I was just talking to Ranga that, during our time, investment banking or banking, you had lots of people going into the financial services sector, which
Yeah.
unfortunately is not happening now. I was
Because
just
the bankers were
asking
the
you-
masters of the universe at the time.
Yeah, they were. And I don't think it was, well, that's the story for another day. But what we want to discuss is, what do all these graduates do? Because a lot of them, it would be very difficult for them to go abroad because, yeah, they've got a commerce degree. And we were discussing about CFA charter holders. And he was just telling me that in Zimbabwe, we've got about maybe 5 or 6 that graduate each year, become a charter holder.
Only
So
5 or
that's
6, not,
yeah.
not a few hundred?
No.
No.
You see, that's
Wow.
and that's probably the only qualification that one that can springboard you into the international arena. So without that, those 10,000 graduates of commerce are basically, or more or less, without jobs, and they're becoming, and some of these were brightest because to do a commerce degree in Zimbabwe, you need something at least 12 points. So these are people, and that's on average 3 Bs. These are people who are very smart. Anywhere else in the world,
So yeah, that
They
was
would.
fairly true before we had this so many universities coming on board. These days, 8 points will get you in.
into a commerce degree. Oh, okay, all right, okay.
Yeah,
So-
but yeah,
But I think it's still, I think somebody who gets 8
8,
points
yeah, it's still good.
is very smart. That's on average, 3 Cs.
Yeah.
That's somebody who is actually very smart. Yeah, but so the thesis is it does not make sense to study commerce at A level. And I want to hear what you gentlemen think. So I'll start with you, Ranga.
So your last statement, maybe if I could seek for clarification, are you saying in the Zim context?
Why would I be talking about the Chinese context?
Yeah. So, but you always talk about how we have globalized.
Yeah, we're saying in
So we
Zim.
want to.
In Zim, it's the thesis is in Zim. Do not study the commercials. You're better off studying sciences or STEM because you have a better chance of going international, of going global.
So I'd say it's true that opportunities have actually shrunk quite a lot. Obviously, we speak of the commercial field because that's where we are. But I think the same can be said of other areas as well, where pretty much because the economy hasn't been functioning at the pace where it's generating more jobs or opportunities, or even maintaining the ones that are there. Pretty much every area of specialization is affected. But obviously, specifically for commerce, maybe the thing is it's not transferable. It's actually very difficult to transfer some of the knowledge to other areas. So it's probably, I would agree with you to a certain extent that maybe we need to consider, obviously, as parents, as guardians, as people that could be able to help these kids in terms of career guidance, that maybe something that gives them more option would be more helpful for them, but also just to instill in them that they have to think like a global citizen. So they have to be considering opportunities that maybe the jobs, the careers of the future that could be able to take them to areas where there are better opportunities. So I would say it's also important to read the economics in the environment, because the career, I think in a way it's a derived demand. So you want to get into an area where you hear that there's where you see growth, where you hear that employers are looking for more of such a talent, and where maybe you can't achieve that, maybe just look for something that's more generic that could actually allow you to float around.
That's a good point you make there about transference of a skill set, that if you're in the sciences you can easily move into the commercials, but the other way cannot happen.
Yes.
Rivaro, and I'm gonna, sorry for doing this, I'm putting you on the spotlight, but I'm gonna personalize it for you, because you're somebody who actually studied sciences at A level, but decided to go into accounting. So this is obviously 25 years ago sometime.
Quarter of a century. Wow.
If you were to read, okay, so I don't want to use the word regret, but if you were to,
as a Stoic, I'm not given to regret.
Fair enough, I'm not going to use that word, but if you were to do it all over again and you have to do it in 2023, so would you go and study commercials, or would you continue studying the sciences?
Yeah, I think even if you have commercial aspirations, so if you want to be a banker, if you see yourself one day as a CFO, CEO, or a marketing director, or somebody with a role that's primarily commercial in scope, I think you're still better off doing an undergraduate degree in STEM, any of the science, technology, engineering, or mathematics, and then do an MBA or do a master's in something that's more commercial leaning, because you get the rigor in terms of critical thinking that is going to that's going to serve you in the long term much more than studying commerce at undergraduate level. You can always pick up commercial skills at postgraduate level with an undergrad in something that is STEM. And you'll be actually much more effective, in my view, if you have a STEM undergrad and in the commercial space. You'll be much more effective than somebody who just did commercial subjects all the way. If you have an engineering undergrad or mathematics or something in the sciences, this guy, what's his name? From the venture capital firm in Silicon Valley, Andreessen Horowitz, Mark Andreessen, he made the statement that he's famous for, that software is eating the world. And I think another one of these venture capitalists made the case that software is the new literacy. It's unimaginable trying to navigate the modern world without being literate. And coding is, because everything, whatever you're doing today, you're interfacing with computer science, you interface, and more likely there's going to be an AI involved as well. So if you have some understanding of that aspect, you're in a better position to actually excel. So I think definitely STEM knowledge is going to be relevant for much longer than a lot of the stuff that we learn in the world of commerce. Because if you think about it, like I remember when I started out in audit, one of the clients I worked on was, at the time, it was one of the big listed credit retail businesses. And it had a whole floor in one of these buildings in the CBD with data capture clerks, right? And, so these guys they got the invoices that from all the branches that this business had, and they punched them into the system, right? And today, when you walk into a modern credit retailer, right, when you check out at the counter, the whole system, including is updated, right?
Except when you go to the doctors,
yeah,
that's still backward. But I get your point. So I know you have no regrets, but what was the limitation? Because the way you're thinking is pretty much generic. That's the same advice someone would have given you 24 years ago. Why didn't you take that advice?
I don't think 24 years ago I got that advice. I think 24 years ago in Zimbabwe, and I think a lot of career advice is based on, it's not forward looking. It's based on what's happening in that particular market at that time, right? And I know a lot of people who've got finance and banking degrees because at the time that they went to university, the most lucrative employers in the market were the banks. Those are the guys who drove the big cars, who were doing well. And so it seemed like a great idea to go into banking.
Hollywood played a big part, certainly
Yeah.
for me. Hollywood played a big part.
And, and that's the thing. We look at who's doing very well at the time that you're going to university, and you say, I want to be like that guy, right? Those are the role models, the people who are doing well at the time.
Mm-hmm.
And we don't actually think about the next 10, 15, 20 years, how the world might change and what might become more relevant. So I think that's the mistake a lot of people make when they look at the world and make decisions about what to study, because they look at what's hot today. And it's not the case that what's hot today is going to be hot in 5 years or in 10 years.
You make a very good point. And Ranga, there's something that you said, tying in with what Rufaro said, which I think, he just doesn't like the word regret. Because, the Stoicists are quite, they don't like that word. But we all have that word. But there's something that you said that he's actually more or less saying that, which I think it's advice that cuts across centuries. It doesn't matter where it is. That you're far better off doing something that is generic early on before you specialize later on. And I think that sort of advice is true today, and it's probably true in 50 years' time, and it was true 100 years ago. Right? So the question I have for you is when you were deciding, because sorry to personalize it, but somehow that's how the message can actually come out clearly, especially for our kids. When you were deciding to do your A levels, and you and I were more or less in the same boat, where you decided, okay, I need a point booster, right? And you focused more on point boosters, which unfortunately then pigeonholes you into commerce. Whereas if you had decided to do something that's generic, the sciences, the STEM subjects that we're talking about, maybe you would not have gotten the points that you did, right? So maybe instead of 15 points, you're probably going to get 8 points. Do you still think you're better off?
Certainly not 8. No way. There's no way.
Shots fired.
There's no way that I was going to get to an 8, but point.
I'm just trying to make. I'm trying to make the point. So the point I'm trying to make is perhaps there's a kid who's thinking of a combination, and he's thinking, well, I need a point booster, and if I get a point booster, I'll get my 15 points. But they'll end up being one of the 10,000 commerce graduates that will not be able to cross the border. Whereas if they do the STEM subjects, they're going to get far less. So let's suppose they get far less. What are the opportunities? Will the world still open up? Because they get 8 points, they go and they study a generic degree, a STEM generic degree, or they actually go to Polytechnic and they do tradesmen sort of degrees like electrical science, civil engineering, those sorts at diploma level. Would you say that it still holds? Somebody with a generic science STEM degree and someone who has a commerce degree, whose future is bright?
It's a point that I've already made that a generic. So I actually believe that at undergraduate level, a person just have to do something generic, and then when you are done with that, so I sort of favor the American model mostly, which where you can even go into non-science areas. It could be social, behavioral kind of qualification. That sort of opens and broadens your thinking, because remember, you are making the transition from high school to uni, And obviously, there are a lot of even life lessons that you are still to learn. So you can't really start off with something hard, and because you then create a problem where you are this, narrow-minded kind of
You're
person.
not versatile enough.
You are not versatile enough, as opposed to someone that, as they're transitioning from high school, they're just looking at things on a more sort of generic level. And then when they become more mature, then they start to pick a point where they say, this is where I want to go. And I'm particularly, when I reflect and look back, I actually think the majority of students that ended up doing commercial degrees, they actually had the aptitude to be able to do some sciences up to a certain level.
Absolutely.
And you then find a situation where, so because most of them would have, for example, the most common would be mathematics. So you'd have maybe a class of maybe 100 students doing some commerce degree. Maybe 80-90% of them have got mathematics with an A sort of grade. So I really would not see, and these are the people that even if they may not have, you can't then extrapolate and say they would get an A in physics and chemistry, but they've got a high chance of getting a passing symbol. So pretty much these people have got the capacity to be able to do the sciences at that level.
But the science faculties are deserted.
Yeah. So my point was, it then becomes some sort of a waste to have someone who's really very, very mathematically,
who's got the aptitude,
minded, ending up to do, because to be fair, I mean, commerce is more like down to down in terms of the academic rigor. You then get to a point where I don't have to push harder because you know what, I can pass this thing without even reading anything. But this is
then you face reality at the end of your 4 years where you don't have a job, where you are just like every other graduate and you can't leave the borders, right? Yes. Whereas your colleague who was brave enough to take the STEM subjects, so maths, physics, chemistry, got less points, got 8 points, and ended up at the Polytechnic, did a civil engineering diploma, but they were able to then leave the country, go to South Africa, go to Canada, go to Australia, and they upgraded. They eventually had a degree. They eventually went into commerce. They eventually did an MBA. They eventually did a CFA because they always had the aptitude. Whereas the graduate who did commerce is graduating from the University of Zimbabwe with a commerce degree or Midlands or whichever, and they can't get a job.
Yeah, so look, so we are allowed to reflect back because these are eras that we actually lived in and under. But I think the most important thing is to be forward looking and say, if a kid was to come to you today with their O-level results and say, what can I do? What kind of advice would you give them? So I would still say, you know what, if you can, because most of them have got capacity, they tend to choose some of them tend to choose the sort of softer option, but they can actually be encouraged even to go the harder way, and possibly because they're still kids and just something that gives them a lot of options. Especially now, I think the world, like what Rufaro is saying, that software is eating everyone's lunch, or whatever the way you put it. But you find that the issue of data sciences, technology, or etc., they are going to be much bigger. So I don't think it was a mistake at the time. I think the economics of the time demanded that, because to be honest, like in Zim, the most paying jobs were in finance. And I know quite a number of people that actually made the shift where they were doing MPC, MBC, and got 15 points and say, no, I'm not going to do engineering or any of the science related. They actually came to sciences. Most of them would come through.
They went to banking and finance.
They went to banking and finance. Most of them would then, some of them would come to actuarial science, but these were people that really had started off from sciences.
Yeah.
So I think for the kids today, they just need to give themselves those kind of options, and I'll certainly discourage from increasing enrollment in business and commercial kind of degrees.
There we agree. So, I don't want to read the tea leaves, but you're a fan of Kurzweil. And what I want to ask...
Raymond Kurzweil, the futurist.
Yeah. And I know that you spend a lot of time. So I don't want to bring in the complexities, but look into the future, because you were quite right. You know, we don't need to look at what has been happening in the last 20 years.
Sure.
But if we're giving somebody advice, so somebody is going to university and they're going to study chemistry.
Yep.
And, they're looked down upon, if you really think about it, especially in Zimbabwe, right? Or physics, or, one of those really hard STEM subjects. And yet, we're about to hear. What sort of encouragement? My teacher.
My teacher.
What sort of...
I'm doing applied maths, I'm doing applied physics or whatever. It was like, this one's going to be teaching.
What sort of advice
can you give them? We were ignorant at the time.
Yeah, exactly. So what sort of encouragement can you give these kids that actually, you are part of the future?
Yeah, so I think those subjects are hard and they require a certain kind of aptitude. And the beauty about the rigor that is involved in studying the hard sciences like physics and chemistry is that if you then pivot to something like software engineering, you tend to be one of the more exceptional software engineers. And these are incredibly valued in the world of tech. And if you look at what we were discussing earlier, which is banking and finance, if you go to Wall Street today and you look at the top firms there, the guys who are highest paid today, they might have a title like trader or analyst, but if you look at their CV, they've got a master's degree in chemistry or physics, and then they pivoted and they went into commerce and they did a CFA or an MBA. And that mind that is capable of learning these difficult things in the field of physics and chemistry apparently is really well suited to understanding the complexities of derivatives and these esoteric financial instruments that if you can figure out and trade well, you make huge amounts of money.
So you're just opening up a lot more options. So there's an interesting thing about that Jeff Bezos talks about. He started off in physics, actually.
Yeah. And
then he realized soon enough, looking at, some of his colleagues, that he was probably not the smartest. And then that's how he then pivoted into computer science. And I think that's something that you are critically saying, that if you take commerce, it'll be very difficult for you to pivot. Yep. But if you take the hard sciences, it's very easy for you to pivot into computer science, into commerce, into engineering, into medicine, into coding, whatever it is.
Absolutely.
There are so many options for you to pivot.
Absolutely.
Ranga, so that we just tie it on, we tie up the loose ends. You said something where you just came in and you disturbed his train of thinking, but which is fine, because it was something that was very, very important. There's this thing that we say about these kids that are now taking the sciences, but that's the easiest way of jumping the border, of crossing the border. If you look at the kids who are at the Polytechnic and they're doing the tradesman courses, those are the ones that are in high demand, that are going over to Australia and going over to Canada. What advice would you give them? So that the kids that are taking up this subject, right, at A level, where they could have taken the commercials, and yes, they would have had the point booster, they'll get the 15 points, but they're going and taking the sciences, and they're going to get far less. Let's be realistic. They're not like you, they're not as clever as you, but they will get far less. They get 7 points, but that 7 points is going to open up the world for these kids. Can you speak to that? And can you give these kids confidence that they're going and they're doing the right thing? And also the parents that are watching, so that the parents also realize why it's dangerous for these kids to be studying commercials.
So the world obviously is moving, is transitioning. And obviously we have to accept that as the reality that we are facing. And the future, obviously, it's going to be science-driven in one form or another, even in the commercial space. So they're talking of machine learning, big data or whatever. you find that the base for that is it's not coming from the commercial side. So there's actually the science side is actually invading more and more into the commercial area. And like I've said, it's actually quite easier for anyone to make that move or shift into the commercial area. So someone that is choosing to going the science route in this in this kind of setup, I think they're giving themselves a lot of options. They are preparing themselves better for what the world, the kind of skill set or the kind of capabilities that the world is looking for, and they're also giving themselves a room to be able to maneuver and adapt to the challenges that are there. And I was actually going to be controversial and say, we are talking commerce and commercial, and obviously leaving the ones from the arts. But I would go a step further and say we would rather have a situation where we've got sciences and arts. So the ones that actually can't do sciences, they can do all the way do pure arts subjects, because I've actually found them to be also valuable to a certain extent. So maybe you might not, they might not give you logic, which is you get from mathematics or whatever, but maybe they give you an ability to be able to interact, to communicate,
rhetoric and critical thinking. Critical thinking.
Yeah.
Critical thinking comes from the
thinking,
humanities.
yes.
But I think that
So given that kind of structure.
So Ranga, I'm going to be even more controversial.
Oh my gosh.
If you're a poor man, you have no business studying the humanities.
Okay.
Yeah. So if you come from a poor background, you have no business whatsoever studying the humanities.
It's very controversial. Please explain.
Well, the humanities from time immemorial were really for the aristocracy, because yes, it gives you critical thinking, it gives you rhetoric, it gives you all these skills that you need for leadership. But they also you need to be in an environment where you can actually explore, where you can be, you can read as many books as possible, where you can think outside of the box and live in a totally different universe. Not when you're worried about, whether you have water or not and electricity. I know that, you can easily become a lawyer, but that wasn't the reason why you studied humanities. Humanities was really for critical thinking, because the sciences give you logic. That's all it gives you. That's why people who study the sciences, that's all they can do, is just be very logical.
Yeah.
But they don't have any critical thinking. They don't have the rhetoric skills. Whereas humanities was really supposed to give an individual a very holistic education. And I don't think that in Africa we're there. I think it's for a very few individuals who will then exploit their humanities background to really do very well in the future. So I sort of disagree with you. I think that if the sciences fail, right? If you really can't do the sciences, then I would say do the commercials. Okay. From a risk management perspective, you're far better off than studying the humanities and you're ill-equipped. You can't start studying the humanities at university level. You must have been reading the classics from the time you were in primary school, which very, very, very few people are doing that. You have people who study humanities at the local universities who've never read a book outside of the set books.
Yeah, so it's like the recent discovery that I observed recently because of the changes in the curriculum. So you've got as kids who are coming out of high school, they're doing arts, doing literature. Then you say, have you read Shakespeare? Like, which Shakespeare?
Okay,
Shakespeare. I'm like, okay, so what literature were you doing if you didn't read Shakespeare?
I think that's how to segue into other matters. So the matter I want us to discuss now has to do with asset allocation. I think there was a report that came out that a lot of the pension funds now are heavily weighted towards property. I think something like 56% of their portfolios are now strictly property investment, which I think from an asset management perspective, that's being overweight in property. Yeah. What I wanted to ask you is, why are we cannibalizing our equities market? Is the 56% just a natural outcome of the market that the equities has not performed, or is it that asset managers have taken a bet on property?
Yeah, for sure, asset managers took a bet on property. I think we had a really bad equities year in 2018, and a lot of the fund managers performed badly, and they had a group epiphany that you're going to get better outcomes in property. And I think they went into property boots and all, and they did really well for a few years, that's the historical basis for the weighting in property. But I think as with any fad, the more people allocate capital to a particular asset class, the probability that there's going to be a bubble increases. So I think the upside became much harder to capture in property development. So I think it's a historical artifact that now, this difference in allocation, and then lately you had the stock market being shut down for a whole month in 2021, and that kind of spooked everybody. And I think one of the outcomes following that trauma in capital markets was to limit exposure to capital markets, because certainly the high net worth individuals and capital allocators that are not regulated, that don't have to have exposure to equities, a lot of them completely quit equities in the aftermath of the shutdown of the market. So the market suffered when it reopened, and so property and other things that were perceived to be less vulnerable to regulatory risk became more attractive, and more capital was allocated there. So the problem really, if you think about the pension fund space, it's a regulatory problem. It's a regulatory risk problem, because you could be doing fantastically in equities or property or alternative investments, and then there's a new rule or regulation that just makes the returns in that space awful. Okay. And then you then have to pivot and allocate capital. So you're saying
you're better off in markets that are less regulated than in markets that are overly regulated. That the shift that we're seeing is probably a shift on regulation.
Yeah, but unfortunately for fund managers that are regulated and pension funds, so their capital allocation is regulated. So there is no safe space for them.
No, but it's about where there is over-regulation. So if you look at the equities market, the things that you've picked up on, it's really over-regulation.
Sure.
Whereas if somebody is in the property sector,
there's less regulation at the moment. Yeah, for sure.
At the moment, and there's a lot more that they can do. More innovative stuff and more wiggle room, so to speak.
But right now, the regulator of pension funds is looking at the capital allocation and saying, "Hey, you guys have too much capital in property. What's going on?" And they, so those noises usually precede some policy action.
Ranga, we haven't seen that much in terms of new listings. We've seen a couple of ETFs and REITs, but really the exuberance that we saw in the late 90s, early 2000s of new listings, of mergers, a lot of corporate activity on the stock market, that hasn't happened. And, the murmur is that's probably why. There's nothing exciting on the stock market. So pension funds and asset managers are looking elsewhere for excitement. What's your view on that?
Yeah, the environment has not been one that actually promotes any corporate activities, merger and acquisition, especially from a private sector point of view, because of a number of issues. So before you even talk of having a new listing, it has to, you need to have an economy that's able to sort of incubate ideas, and then ideas become some sort of a business that's going to be supported at a different level, maybe venture capital. It graduates maybe all the way to private equity. And usually IPOs, initial public offerings, tend to be the way in which private equity investors get their money out by maybe taking the company public. So that whole system hasn't been working as it were. what we've seen mostly is because of challenging and difficult economic conditions, most businesses are actually failing. So maybe the space which is there, that's potentially, if one was to take a view, is more that's focused on distressed
Entities.
yeah. So whether it's distressed debt or distressed equities, someone that has got money comes in, pick up these distressed firms, so you clean them up and possibly put them at a point where you can flog them out in one form or another. But I think with all this, the general regulatory and the changes, the policy shifts, it has been very, very difficult for financiers, for investment bankers to take those that kind of route.
What you are correct, but it's also true that in our economy we do have mid-sized companies that are doing very well, but they're unlisted. Why, as investment bankers, why have you not convinced these companies to come onto the market?
So I think if you just look at the listed ones and ask fund managers how confident they are with middle tier firms, So there's so much headwinds in this environment, such that if you want to be safe as a fund manager, you want to go to the tried and tested. Okay. So you look at the stock ZSE right now, maybe mostly 2 stocks, a third one here and there that keep on changing, and then a few on the Victoria Falls Exchange. So if you can't trust a business that has been listed maybe for the past 20, 30 years, you know what they do, or some they're actually in nice sectors, for example, food processing and beverages, etc. What kind of support do you think a mid-sized tier, a mid-sized firm that's been operating as a private player would get on the market? It will be
punished.
It will be punished. So we don't. We run the risk of just having listings for the sake of listings, and then not being able to get the enough traction and the support because of the level of risk which is there, and the lack of excitement which is also there. I also just wanted to just make a comment on the whole asset allocation and why we have got equities, properties having a higher weighting. I think part of that is also a legacy of the hyperinflation period. So I think before the hyperinflation, the asset allocation, although maybe it was guided in one form or another, you had equities on one side, fixed income and other things. They were pretty much doing well. We didn't have hyperinflation. Come 2008, the fixed income was wiped out. And it's actually part of the problems that we have with the pension sector right now, where if a fund was found with a higher allocation, say in fixed income, and when 2008 came, that fund was wiped out quite significantly, and right now they are struggling. And then the same also happened to equities to a certain extent. And what sort of remained standing at that time were properties, So we are dollarizing. We are starting off with a fund that has got mostly equities because the other asset classes had been decimated. So then you move some years later, because the episodes of hyperinflation keep coming back from time to time. I think fund managers are looking at it and ask a question: what kind of asset class will hold value should another serious hyperinflation period comes up? It's mostly going to be property. Mm-hmm. So that's the issue. And then my last submission will be on the.
You're sounding more and more like a lawyer.
Okay, colleagues. So it will be
last submission. Colleagues. Soon you'll be calling us Leonard friends.
I said Leonard Collins.
Okay. So the equities market has also lost some value. So in that whole sort of calculation, it then leaves the property, because the property values are also, in some way, I would say they bubble. So because the equities market is actually driven by actual market activities. So the price of a stock today it's a result of the action of buyers and sellers on a market on a sort of regular.
Would you not say that's the same also with
No, it's mostly fair value adjustments.
Okay.
Yeah.
Okay, so those are valuations, not transactions. Okay.
Yeah. It's valuations. It's not market driven. And some of the valuations, I've seen the valuations actually can become so steep going downwards, because usually the value of a
a good
property,
point.
the value of a property must be linked to its income generating capacity. So the cap rate,
rental yield.
rental yield and whatever. And when the rental yield was coming under pressure, we didn't see much in terms of the value of properties adjusting downwards. If anything, they were maintained. So I think what you see,
So what you're saying is
I don't trust the number.
The price was maintained, but the rental yield moved from, let's say, 10% to maybe 3%.
3%. They
Okay.
still
And then now
maintain.
they justify the 3%.
Exact. So I think when you look at the values on the balance sheet, when you try and then compare the value of properties on these institutions' balance sheet versus what is on equity, the equities one is more reflective to a certain extent, of course, minus the impact of regulation.
buyers and sellers.
Yes, buyers and sellers. So I think that's the other issue that also then becomes that needs to be looked at.
Okay. All right. Fair enough. So the last bit that we want to talk about is just what's actually happening in the real economy. So we've seen gold producers, prices have come down, revenue has come down, miners as well. We've seen the amount of gold actually coming through to Fidelity. We've seen that reduced. We've seen manufacturing under strain. We've seen grain under strain. I think the last we've heard is we only have 4 months or 3 months of grain cover. So we started to import. We're seeing an economy in the real economy limping. Would you say that's a fair characterization?
I don't know whether the economy is limping, but what I'll say is that there are material headwinds that affect our economy in 2024 that were not there this time last year. So this time last year, we weren't facing a drought. So speaking to the agricultural sector, and I think we looked at some numbers around what's happening in terms of hectarage under maize, and I think we're looking at potentially a deficit of 1.1 million tons. Between what we are
When
likely
it's
to
coming,
produce and what we require for consumption, which was not the case last year. So that's one. We saw weakness in commodities in the last quarter of last year, which we think is going to be true for all of this year. So the receipts for a lot of our minerals are going to be down this year. And I think, so I also think the fiscus is under strain in a way that it wasn't at the beginning of last year. And you see it in the budget action, basically increasing tax heads. This is, like the sense you get from the tone of the document, of the budget, is that you have a fiscus that is under pressure to raise cash. And if you think about a lot of the infrastructure projects that are stalled, it was obvious to us looking at this time last year or a year and a half ago that the funding model for these roads and infrastructure projects was wrong. You can't there's no country in the world that funds major infrastructure projects directly out of the fiscus with no more revenue. You actually go out into the market and you raise long-term capital, or you go into PPPs, public-private partnerships, and you raise money for decades at a time to fund your infrastructure projects. We didn't do that, and I think the cash has dried up for that. So you can actually see that the progress in these things has stalled, and some of these new taxes exist explicitly to address this problem. So the increase in toll fees, the literature around the announcement specifically says that the extra receipts are going to be ring-fenced to fund infrastructure projects. So there's definitely constraints in terms of government's capacity to spend money, and the government is by far the biggest individual player in the formal sector. They employ more than any other company or corporate, and they spend more than any other formal institution. So if they have constrained capacity to spend.
To my question, your argument is we're not limping, but
But
we're
they-
facing headwinds,
We're facing big headwinds.
big headwinds. So the natural question to that is, what's the outcome of these headwinds? Do you think that we're prepared for it?
So to me, the way I think about it, the answer to that question is a function of how the government responds to these headwinds. Okay, so if they respond to these headwinds with more of the same policies that we've seen over the last 2, 3, 4 years, then we will for sure end up limping. But if we actually realize that one of the reasons why we are particularly vulnerable to these headwinds is because of some of this policy action that we've taken over the last 18, 24 months that's not serving us well, and we perhaps need to pivot and do things a little bit differently, then we might actually address some of these headwinds in a way that's constructive and have a good year. I mean, although I think the probability of that
Pivot. That seems to be the running thread since we started this show. Do you see us pivoting in light of these headwinds?
No, that's what we should do. But we are not given to pivoting in the right direction. So with the headwinds, we tend to become very confused, and then almost consistently take a wrong turn. Some of the solutions that we are trying to proffer for our problems are actually creating more problems. So, for example, the miners, when they say they are distressed, they want government to help them, obviously because the global commodity prices have come off in a significant way. They actually go on to say beyond the commodity price collapse, they're also facing a local problem in terms of high taxes. So they are trying to generate more revenue to plug a hole in the fiscus by taxing more, but it's creating a problem to the productive sector. So you haven't solved a problem. We have got this also now. There's this drive to try and I don't know, sort of spoke out the informal sector. I'm sure we also the SI to the effect of removing, which had the effect of removing some
Import duty.
In fact, not removing, actually
Increasing.
So some of the basic stuff that were jute free, jute has been added to them. Is that the right response to the problem that we have? I don't think so, because I don't believe that the informal sector has created problems. The informal sector has actually become a coping
I beg to
mechanism.
differ, but I'll let you finish.
Okay, let me finish. The informal sector, in my view, is a coping mechanism, and that's why I don't celebrate it. Most of the players, they don't wish to be in the informal sector, particularly the ones that are employed there. They would rather be formal. They would even the operators. If you're given an opportunity to grow your business, formalize and etc. versus maybe keeping it small and informal, I think most of them will choose formal. But instead of policies that actually promote growth, we actually have got policies that are coming to try and squeeze as much cash flows as possible from the informal sector. And what signal are you actually giving to them? You are telling them that even as an informal guy, the bigger you become, the more vulnerable you are to a ZIMRA or to some other policies. So the cost of compliance is so huge to a point that most of them will actually go underground. I don't think they will stop importing these basics. They will just avoid the border. They cross the river, and you still find the products here. And what the net impact will be, they'll be more expensive to the buyer. So I don't think that's the pivot you want. So they'll actually pivot in a very wrong direction, and we should expect to see more and more of these changes in policies in a way that becomes more confusing for everyone, businesses and
Okay, so
individuals.
we grant your begging.
Well, look, I think so. Certainly, I agree with some of what Ranga said around the informal sector. I think the growth and success of the informal sector is a function of policy action that makes life harder for corporates. And I think the obvious solution to that, and is to change the policy environment to make it more favorable for the big corporates. And I think one of the things that when you look at the government post November 2017, that they've been consistent, is that when they take policy action that has significant, severe outcomes, they've been quite responsive to that blowback from the market, and without as much pomp and fanfare as the policy action announcement, they just let go of things that are not working. And I think they are seized with this matter of collecting more taxes. And I agree with Ranga that they've taken policy action that is not going to produce the outcomes that they're looking for. But what I believe will happen is eventually, as the policy actions that they've taken fail, they're going to have no choice but to actually consider policy action that's going to give them the outcomes that they're looking for, which is more tax revenue. And I think the only way you can actually get more tax revenue is if the formal sector that is law abiding and tax paying starts to regain some of the market share it's lost from the informal sector. And that can only happen by creating a policy framework that is actually more favorable for the big corporates. So, so this is one of the big bets that I'm making earlier this year, that eventually they're going to come around to doing the right thing here, which is promoting the growth of the formal sector's market share. That's the only way that they can actually increase state revenue. All of these other measures are going to fail.
Okay.
So does that have to come at the expense of the informal sector?
Absolutely.
Well, then I also beg to differ. I think that policy should be aligned to economic actors. This chopping and dicing of sectors, that it's informal, it's formal, it's big, it's small, it's mid-sized, it's totally irrelevant. If policy was directed at economic actors,
Yep.
and it was a just, reasonable policy, then economic actors will behave appropriately. You can't run away from the informal sector. You can't run away from the formal sector. But I think pitting these sectors against each other is actually problematic in itself. And I think that we're feeding into this when we continuously speak about policy and we say this is informal sector and this is formal sector. It shouldn't matter at all. What should matter is economic actors. Do we have and have we made the right incentives to get the economic actors behaving appropriately? And by behaving appropriately, we mean being very gung-ho about the future and investing. That's what we're worried about as policy. It's not revenue, because revenue is downstream entrepreneurial activity, investment activity, savings. That is where we should direct policy. If policy is directed at investment and savings, then entrepreneurs will do the right thing. And if those entrepreneurs do the right thing, then effectively it helps all.
But the two things
all
that you're,
sectors of the
that
economy.
you're speaking to, investment, savings, entrepreneurial activity, government revenue, they're not mutually exclusive, right? It turns out that the policy framework that's great for government revenue is also great for savings, is also great for investment, is also great for entrepreneurs, it's also great for the formal sector.
Well, no, not necessarily true.
Okay.
You see, that's the thing about the informal sector is it's with us till the world ends,
I beg to differ.
right?
So
the informal sector. Well, even in America, they do have an informal sector.
there's
let's
an
not-
informal sector everywhere,
It's-
but
an
I
informal
think
sector will always be with
But-
us,
but-
and even more so in a poor country. The informal
but-
sector will always
and
be with us.
also-
but where we'll push back is I'll make the case that if you look at the relative size of the informal sector in here in Zimbabwe to the formal sector, right? That is a direct function of failure of policy action in the formal sector. So there's no reason
No,
why.
it's not a direct function of failure in the formal sector. It's a direct function of hyperinflation, of misfiring in the economic policy direction. If economic policy was just right, the market will adjust itself.
Exactly.
Every business started off as
Informal.
an informal business. That's just the natural course of business. So an economic actor, if you're a policymaker and you start directing policy and you say, no, I want to formalize the business. How do you formalize business when there's low investment? So these markers are very important. That policy must be directed at savings and investment. If policy is directed at savings and investment, then the downstream effect of all this is eventually government.
Yes, but
revenue
what I'm
coming
saying,
in.
the point, I don't know whether you're hearing me, because the point I'm trying to make is that what's great for investment and savings, right, is fantastic for the formal sector, right? So,
And also for the informal sector.
So let me give you an example of investment, okay? There's probably a chap in Cape Town right now as we speak, managing $1 billion that they're investing across Africa, right? And they have zero exposure to Zimbabwe at the moment, right? And it's not because there aren't investment opportunities in Zimbabwe that they can wrap their brains around and consider. They're just saying, hey, you know what? If I call a bank in Harare and I say, I want to wire $15 million to make investments there, how does it work? How do you convert US dollars into Zim dollars, and what assets are available in Zim dollars? And then when I make a bunch of profit and I want to pay dividends, or I sell some of my investments and I want to ship my money out, how does that work? Just explain it to me, right? The explanation the best bankers in Harare would give that guy would give him a headache. Okay. And he'll just say, you know what? This is too hard. I'm not doing this. I'm going to go to Lusaka. I'm going to go to Mozambique. I'm going to go to, right? So there's a whole bunch of guys managing money that they can allocate to Zim that they're not, because the policy framework is just too hard. And if we change that, right, it would, and because chances are that guy sitting in Cape Town, if all of those exchange control and foreign currency exchange rate headaches didn't exist, and the guy was happy to invest in Zimbabwe, he's not going to invest in a tuck shop, okay? He's probably going to say to a business like, okay, all right, guys, you guys have had a rough time in 2023. What do you need to steal market share from these tuck shops and be competitive? We think this can be a great business if we pump in a bunch of money and attack the market aggressively, right? That conversation is not happening because at a high level, the guy in Cape Town isn't even thinking about investing in them, right? So what's good for investments
I think the guy in Cape Town doesn't care who OK's customers are. And OK's customers could be tuck shops, could be informal, could be formal business. It's business.
We can't have a policy framework that says formal is good, informal is bad, or informal is good, formal is bad. That's exactly what we have had in the last 2 years. So government has pivoted to the side of the formal businesses just a few months ago. But if you step back maybe 12 months ago, they were all going into the direction of the informal sector. I think what they just have to do is to create an environment where entrepreneurs can thrive, whether they are running formal businesses or informal businesses. And I think, in my view, the best way of formalizing again is to make the formal, running formal business look attractive, even to the informal, to the informal entrepreneurs, informal chaps. You can't do that maybe by using a hammer to try and deal with the informal guys, because let's be honest. If you go downtown, the amount of merchandise that you see out there and that we call informal, I actually believe that is being driven by the formal guys who are actually trying to circumvent the problems in the informal. Yeah, because the amount of stock that is there, it can't be funded by a chap that has got a few $100. You see,
Fair enough.
Yeah, so I think it's possible to have a policy framework that makes formalizing attractive. So it may be in terms of maybe access to credit, access to maybe certain incentives, where maybe the informal operator would feel like, I'm being left out because I've not formalized. They have to be under pressure to say, okay, for me to be able to access this facility from a bank, the bank requires these kind of things that I have to put.
Criteria.
But right now, there is no advantage in formalizing, to be honest. If anything, there's actually a whole lot of gains to be made by formal businesses informalizing, because it means that high cost of compliance it won't be there, and
Look,
you still be able
I think
to.
one of the things
then
that's-
let me then make my final point. Like, if in a US dollar environment, it's actually more attractive to be informal, especially when you've got a chopping and changing in terms of the currency kind of scenarios. So one of the reasons why formal retailers are suffering right now is because they are compelled to the prices have to be in a Zim dollar, and if it's a US dollar, there has to be a Zim dollar equivalent at the interbank. This is the problem that an informal guy doesn't have. All that they have to do is to sell in USDs at a
Gentlemen,
price that's
our
attractive
time is
to
up,
them.
but I'll give Rufaro the last word.
Yeah, so one of the things that we conflate when we talk about the formal versus informal sector, in Zimbabwe, which is different from talking about the informal sector, first, in the developed world, right? Because everybody in the developed world with a bank account is paying taxes. It doesn't matter whether they have they're selling things, out of their garage or at a flea market. If they're banking any of their money, chances are they're actually making a contribution to the fiscus, right? Whereas in Zim, what's actually happening is not only are most players in the informal sector contributing zero to the fiscus.
That's not true.
What do you mean they're not? Are they paying any direct taxes as payroll, as income?
No, municipal, they pay.
No, but in terms
fees,
of the taxes
they pay VAT. There's a lot of taxes that they actually do pay. The only tax that they don't pay is perhaps income tax
and payroll tax.
Payroll tax,
and their VATs for their sales, right? And,
but then that's like 1.2 or 2%.
But the point I'm trying to make is that not only is the informal sector in Zimbabwe actually, for the most part, out of the tax bracket, they're actually breaking the law as well, right? Which and that's when you once you have a state with an economy where the informal sector is 70-80% of it, and they're actually not contributing to the fiscus, and they're actually not respecting the law, then that's a problem.
That's not true. That's factually not true. They are contributing to the fiscus.
No, they contribute, but they're not paying their taxes. Like, if they're not paying income tax, they're breaking the law, aren't they?
How many companies actually pay income tax? Because for you to pay income tax, you need to be profitable.
Yes.
How many companies in the economy are actually profitable enough to pay the income tax? So we can't. So you know what? In terms of policy, and I quite like what Ranga is saying, that the informal sector is a reaction to our policy.
On that, we're in agreement. Yeah, I agree.
That it's actually much better to be informalized and to be nimble-footed to navigate the policy, the inconsistencies in policy. Mm-hmm. So that's why people are eventually become informal. But all they have to do, if there is no arbitrage, if economic policy is directed at savings and investment, naturally downstream more businesses would formalize. Mm-hmm. Downstream taxes,
the revenue will go up, yeah, for sure.
Right? So it's like, where do you start? And we're actually saying that all you need to do is to start with savings and investment. If you get that right, if you get that equation right, you take away the arbitrage opportunities, you take away the policy inconsistencies, and you say, you know what, this is our policy environment for the next 10 years. And you direct it at investment and savings. Just that. Mm-hmm. Everything else, that's the invincible hand. That's how the markets will work. Mm-hmm. They will react to your investment and saving policy.
No, I agree.
Ranga, would you have the last word?
So, look, it doesn't have to be a depressing start to the year. Certainly there are opportunities, but obviously they are favoring those that can adapt. And obviously it's very difficult to do that if you're a formal business. because you've got a board to report to, you've got some strategy, and all these things that tie you to plan for the next 3-4 months, which is like a century in Zimbabwe.
Well, there you have it. 3 months is like a century in Zimbabwe. Ladies and gentlemen, please share your comments. These are riveting debates. I love having these debates. Let's hear your thoughts and your views, and let's enjoy tonight and the weekend. We are certainly looking forward to the weekend. It's been a long week. Otherwise, have yourself a wonderful February, and continue liking, sharing, and subscribing. Cheers.
Cheers.